Good afternoon, boys and girls. It's the Liberty Call for what day is this? Thursday, February 3rd, 2022. Groundhog Day was yesterday. You know, when you live out here in the middle of nowhere, some days, especially when my wife's out of town for a conference, you lose track of what day is what. So, I'm sure there's a lot of people out there, especially like if you're retired or, those of us who work from home, you're like, gosh, what day is this? Is this Friday, Thursday? So anyways, hope everyone's having a great day. I'm Raymond Dahlman, the president of DSA Financial Group. If this is your first time watching, be sure to subscribe so that you get notified each time I go live. Also share with friends and family. I would greatly appreciate it. So kind of a down day in the market, not all that great. Looked like things were down more than 1% across the board for the indexes. And, just looking at the accounts in TD Ameritrade, they were about 0.5%. So certainly not as terrible as what the indexes are, but no one likes to see red on their accounts. So, all right. So we did get some snow, we did survive, no power outages or anything like that. So that's always a good thing to not have to deal with. But let's go ahead and take a peek. This is the front of my house. So you can see I cleared the driveway, not with a shovel because I'm almost 50 years old. Like that driveway is like 30 yards long. So did use a snowblower and nice soft snow, didn't clog it up or anything, even cleared off the truck. And here's a piece of advice for folks out there. If you're in a snow area, clear off the tops of your cars. I mean, it's one of the first lessons I learned here. Actually, the first time I came to Colorado back in 2016, we were here in March and, had a blizzard come through the day we were going to leave and decided to stay an extra couple days. And so didn't have snow scrapers or anything like that. The hotel was nice enough to let us borrow a broom and a shovel to get my truck at the time, cleared off. But there's people driving down the road with like an igloo on the tops of their cars. And number one, it sprays snow everywhere. Number two, it's dangerous, especially if that, snow has hardened into ice and goes flying across, especially if you're driving, on I-25, in Denver or any of the major roads where you're going over 60, 70 miles an hour. And even though the roads are clear, you don't want an iceberg flying at your windshield at, 70 or 80 miles an hour. So I personally, and I have a little tip video I'm going to share at some point, but, I use a broom. I find it easier, a nice nylon broom. Some people are like, oh, it'll scratch the paint. I wouldn't worry about that. I drive this truck, I drive, I'm not worried if there's a few scratches on it, but, works really well, especially if you have a big vehicle like mine. Pushing the snow off is I'm only 5'9", so getting the snow off is a huge thing or good thing to do for your fellow neighbors and folks wherever you live. So, anyways, all right, we'll get off of that and get to what's going on in the world. So I'm sure most of y'all don't give a damn about the snow here. All right, Dow Jones Industrials was down 1.45 today. The S&P 500 down 2.38. NASDAQ down 3.74. NASDAQ got pummeled. I imagine a lot of that had to do with Facebook or Meta, whatever it's called today. The overnights, it dropped like, I think $70 or $80 a share overnight and didn't do much better once the market opened. Small caps are also down 2.19%. The VIX was up 10% today to 2435. Again, for those paying attention, the VIX, below 20 is kind of your green light. 20 to 30 is your yellow light. Proceed with caution. Anything over 30, I view that as a red light. Make alternate, or you may want to make other reposition your portfolio if that's the case. All right, across Europe, most are all red. I don't see a green anywhere until I get down to same thing with the Asian markets. The only Asian market that was in the green was the Hang Seng. It was up 1.07. Everything else in the red. And there's a couple greens down here in some of these small indexes. So, not the best day in the stock market, but hey, we've had several, 3 or 4 positive days in a row. With some significant uptrend. So, not really going to get overly worried about it. So, big picture, I have my concerns. I have my worries about what's going on, with what the government does and how the economy is handling that. I certainly am not going to be shocked to see some sort of a major correction or recession in the stock market. So, that's my own personal view. Others may view it differently. All right. So, a couple news stories I got here for you. Oil tops $90 as African production outages, the latest driver. This comes from investing.com. Oil prices ticked higher again on Tuesday with West Texas Intermediate and global crude benchmark Brent crude markets both clearing $90 a barrel on news of supply disruptions in African states, Libya and Nigeria. An oil production and storage vehicle exploded off the coast of Nigeria earlier on Wednesday with 10 crew members aboard, with no word yet on casualties or the amount of crude that may have been spilled into the waters. In Libya, the National Oil Corporation said Thursday it had halted exports from 6 ports, namely Brega, Zutina, Ras Lanouv, Zawaya, Matilia, and Sidra. Due to bad weather, no updates were immediately available when crude shipments would resume. Stories of the disruption added fervor to a market already hyped up on the notion that the world would run short over the next few months with the approach of peak summer demand period. OPEC Plus, at the conclusion of its February meeting on Wednesday, approved another 400,000 barrels per day in production that will begin in March. OPEC Plus has announced similar hikes month after month, but data shows the 26 nations in the Saudi-Russia-led Oil Producers Alliance consistently added less than net exports, suggesting production constraints at oil fields under invested during the 2-year-long coronavirus pandemic. WTI, the benchmark for U.S. crude, was up $1.84 or 2% to at $90.10 a barrel. London-based Brent, the global benchmark for oil, was up $1.50 or 1.64% at $90.97. Both benchmarks cleared that level for the first time in 7 years. The pace of the oil rally on for the 7th straight week could slow at around $90, even with projections for $100 a barrel next, says analysts. I don't think that we will see any significant correction, but we may see it lose some momentum in the near term and even pull back a little, said Craig Earlham, analyst at online trading platform Owanda. So, for those of us who have to drive a significant different distance to get anywhere, this is not ideal. But if we didn't have a lot of the constraints here domestically, it probably wouldn't be a big issue. So, all right, next story. U.S. weekly jobs claims decline further as Omicron, the transformer wave, subsides. By Lucia, this was written by Lucia Mudikani from Reuters. The number of Americans filing new claims for unemployment benefits fell more than expected last week as COVID-19 infections subsided, suggesting that an anticipated slowdown in job growth in January was likely temporary. The second straight weekly decline, reported by the Labor Department on Thursday, partially unwound the recent surge, which had boosted initial claims to a 3-month high in mid-January. The Omicron COVID-19 variant grips on the U.S. labor market is loosening and job growth should reaccelerate, said Ryan Sweet, a senior economist at Moody's Analytics in Westchester, Pennsylvania. Initial claims for state unemployment benefits dropped 23,000 to a seasonally adjusted 238,000 for the week ending January 29th. Economists polled by Reuters had forecast 245,000 applications for last week. Applications fell sharply in Ohio, Kentucky, and Illinois, offsetting notable rises in Michigan, California, Indiana, and Pennsylvania. Michigan, California, and Pennsylvania. Blue states. Weird. Claims increased from the beginning of January through the middle of the month amid an onslaught of coronavirus infections driven by The Omicron variant business activity, especially in the services sector, was impacted by the latest wave. A separate survey from the ISM on Thursday showed its non manufacturing activity fell to 59.9 last month, the lowest reading since February of 2021, from 62.3 in December. A reading above 50 indicates growth, blah, blah, blah. The ISM said the spread of the Omicron variant has disrupted operations, especially through reduced staffing levels. Services businesses also continue to grapple with erratic supplies of materials and high input prices. Labor supply constraints were highlighted by the ADP National Employment Report on Wednesday, which showed private payrolls declined in January for the first time in a year, raising a strong possibility that the overall economy shed jobs last month. According to the U.S. Census Bureau Household Pulse Survey, published in mid-January, 8.8 million people reported not being at work because of coronavirus-related reasons between December 29th and January 10th. See, here's where I don't really follow along with their logic. So if you're off work for being sick, how does that impact the unemployment numbers? I mean, just because you're off for, I don't know, say a week, because you got the flu or whatever, you don't normally quit your job and file for unemployment benefits. So I see a disconnection there. I don't know if someone sees something or understands that. Let me know. People who are out sick or in quarantine and do not get paid during the payroll survey period are counted as unemployed in the Labor Department survey of establishments, even if they still have a job with their. It still doesn't make sense. You wouldn't file for unemployment just because you're off work. And I run a business. I don't, if I were to take time off, I don't notify the state of Colorado. Right. The worst is likely over. The government is likely to report on Friday that non-farm payrolls increased by 150,000 jobs last month after rising by 199,000 in December, according to a Reuters survey of economists. Estimates range from a decrease of 400,000 to a gain of 385,000. The unemployment rate forecast is to be unchanged at 3.9%, underscoring tightening labor market conditions. There were 10.9 million job openings at the end of December. The workforce is about 2 million people smaller than it was before the pandemic. Claims have dropped from a record high of 6.149 million in early April of 2020. The recent labor market disruptions are likely over and job growth will probably pick up. The United States is reporting an average of 433 new COVID infection, or 433,000 new COVID infections a day, sharply down from the more than 700,000 in mid-January, according to Reuters. All right, blah, blah, blah. Okay, so, that is some good news that the unemployment numbers are going down. That means they're not on the dole, which is good. But at the same time, I still see this as being kind of turbulent, but we'll see where things go. All right. U.S. private jobs plunged last month on Omicron. ADP data shows employment at U.S. companies declined in January by the most since the early days of the pandemic, as the Omicron variant of the coronavirus registered a swift yet likely temporary blow to the nation's labor market. Business payrolls fell by 301,000 last month in a broad-based decline, according to ADP Research Institute data released Wednesday. The median forecast in Bloomberg survey of economists called for 180,000 person rise. The decrease in employment due to a surge in COVID-19 infections has led some business closures and restrained activity, exacerbates tightness in the job market. A near record number of unfilled positions and increased employee turnover are contributing to capacity constraints. Still, employment growth is seen as picking up as the spread of the Omicron variant wanes. It's more of the same details. All right. One last article I wanted to review. No, the U.S. Doesn't have $30 trillion in debt. Well, for anyone paying attention, we went over 30 trillion as far as the debt calculator last, I guess it was earlier this week. So let me see. U.S. debt clock. Yeah, we're at 30 trillion. 8,541,100,000 and moving too quick down here at the bottom. So per citizen, we owe $90,000 per citizen, and per taxpayer, it's just a hair under 240,000. So what this knucklehead is saying, Nate DiCamillo, saying is that we don't really have that much 30 trillion in debt. So let's go ahead and read through what this moron has to say. On February 1st, the U.S. Treasury Department reported the national debt hit a record 30 trillion, prompting much hand-wringing about the fragility of the U.S. economy. But that doesn't mean the federal government owes that amount. Just like you don't owe thousands of dollars when you start setting aside money for, say, a home remodel. In that case, you would write down how much you need, create a savings account at the bank, and start allocating money towards that project. But if you still haven't hired any contractors or bought any supplies, would you count the future cost of a home repair as current debt? No. Around 8 trillion of the 30 trillion cited by debt hawks as the government as what the government has borrowed is the equivalent of that money that the government owes itself in the future, says J.W. Mason, an economist professor at City University of New York, John Jay College. For example, the contributions to the Social Security Administration puts aside into its trust fund to be paid out later get counted as debt. Well, the problem with the trust fund is that they took all the cash out and put treasuries in there. Treasuries are trash. They're only as good as what the government. I mean, the government will just print more money to pay that out. So, I mean, getting repaid in U.S. bonds and treasuries is not exactly a win-win, in my opinion. So, in reality, what the federal government owes is 22 trillion. Mason said. Does the size of the deficit matter? While public debt remains a concern for countries that borrow U.S. dollars, it is less of an issue for the U.S. itself. The dollar is the world's reserve currency, and more debt doesn't increase outside investors' demand for it. Economists sometimes believe that increasing the federal debt weakens the dollar during crises, but usually investors end up running to the dollar as a safe haven asset instead of shying away from it, Mason said. This time around, policymakers decided to take on more debt to blunt the damage from the pandemic by sending out direct checks, granting a child care tax credit, and creating a paycheck protection program. All these programs have left households with stronger balance sheets than before the crisis. So if you think government debt is too high, ask yourself if you think it would be better for families to hold that debt, Mason said. Does government debt affect inflation? Government spending affects inflation, but the size of the deficit doesn't have an impact on prices. Inflation happens when the demand for goods and services outstrips businesses' ability to produce them. The pandemic, see, I'm going to stop right there. That is a lie. Inflation is when you inflate the currency. So when you print more dollars out of thin air, that is inflation. The ability for businesses and goods and services having less goods and services than currency, yes, could create a price increase in said goods and services just because there's a higher demand. But when you increase the money supply, you're actually, that's the true definition of inflation. So if anyone wants to argue with me on that, be happy to do so. The pandemic has limited how much stuff businesses can produce, both because of supply chain issues and a shift in what consumers bought, more goods and fewer services. These disruptions have nothing to do with the deficit. The deficit's a separate issue than the debt. Like inflation, the deficit is regularly used as a stand-in for consumers' general fears about the economy. Conservatives' knee-jerk reaction is to associate it with waste, but it's a critical part of keeping the U.S. economy stable. That's a lie. We don't need government at all. Please don't have any particular concern with the deficit, but it's simply a sort of symbol for things being bad in the economy, Mason said. So, I mean, what I read into this article is basically they're trying to make the media, reporters are trying to make an excuse for the insolvency of our government and, trying to make the point, oh, it's really not that bad. It's only 22 trillion. It's not 30 trillion. Yeah, so don't worry. I mean, to put it into terms of of a household. So the government brings in $3 to $4 trillion in taxes currently, and it owes $30 trillion. So if you were to, cut off a bunch of those zeros and commas and put it into terms of a household, let's say the household has $30,000 to $40,000 in income, it would have $300,000 in debt. So I mean, it's 10 times. So, I mean, if you were to, if your friend or your neighbor or your family member were, you were sitting down talking about, money and finances and stuff like that. And you found out that, your neighbor has, they only make 30 grand a year and they got 300K in unsecured debt. You would think that they were nuts. And then to hear, oh, well, we're going to go ahead and put a pool in and do all these home renovations. Yeah, we're borrowing more money to do that. You would be dumbstruck by that. So anyways, all right. Well, I'm done for today. Hope everyone has a fantastic evening. I'll be back tomorrow with the weekly wrap up, wrapping up the week in the market. So hope everyone has a fantastic evening, and I will see you guys tomorrow.